What's going on, guys, and welcome back to another video. So it's certainly been both an exciting and stressful few weeks to say the least, with a lot going on which we'll discuss in today's video. But most importantly, I have some very exciting news to share with you today, and that is that we finally bought our own property, our first home. So in today's video, I want to break it down into three separate parts. Firstly, we'll kind of give a brief overview or summary of this new house. Second of all, we'll give 5 tips on what I've learned along the way from saving my first euro all the way to mortgage approval and then actually finding a house. So hopefully those 5 tips will be able to help you out if you're in this process as well. And finally, we'll go through my investment plans going forward. So with all that being said, let's dive right on into today's video. So firstly, let's give a very brief summary on this home. Now before we get into that, I just want to say sorry again for the lack of uploads, mainly due to being fairly hectic over the last few weeks since joining the gym, obviously my normal 9 to 5 job on top of that, then having the wedding plans and organisation, and then with the house on top of that as well. So as you can imagine, it's been fairly full on. But firstly now, let's give a brief summary on this new house. So in terms of this property, it's a brand new build and will be built at the start of next year, just before the wedding, so it's going to be a very exciting 2022 to look forward to. So again, we'll kind of document that the whole way. Now obviously, there's certain things such as location of the house and cost, etc. that I won't be able to disclose, obviously for my own personal privacy, so I hope you understand that. But again, it's a brand new build, and hopefully as well this will be the start of a new series down the line, and over time we'll accumulate a good few videos on the do's and don'ts, because over the last 3.5 years of starting this journey, I've really learned a lot along the way, and hopefully what I've learned and mistakes that I made along the way as well won't happen to you by watching these videos. So now we'll go through 5 tips that I've learned along the way since starting this journey over 3.5 years ago, with the hope of helping you not make some similar mistakes and kind of give you some perspective. Now we won't go into too much detail for each of these 5 tips. In any circumstance here where you'd like more information on any of these 5 tips, we can make a video down the line on that as well. But the first tip is that patience is key. Now starting this journey 3.5 years ago, I thought personally that we'd have the money saved up and a house bought or built within 12 months. But unfortunately that is not the case at all. You need to save up a large amount of capital at your own expense as well, first of all, before even applying for a mortgage. Now, as a first time buyer in Ireland, you need 10% of the deposit ready to go. So for example, if the house is €300,000, you need to have a minimum of €30,000 saved. And if it's a second hand house or second time buying a house, you need 20% of the collateral. So as you can imagine, if the house is 500,000 or even 600,000, you need a fair bit saved up and ready to go before you can even apply for a mortgage. Now, one of the points later on is in terms of the financial side of things. So again, we'll just park the financials for now, but patience is certainly key as well in terms of looking for the right property. Now, even in our own circumstances, even about 2 years ago, we nearly jumped in just to buy a property for the sake of having a property. But again, waiting and patience is certainly key here, as kind of more than likely you'll probably live in this property for the rest of your life, or even you might even move on down the line, who knows. But again, this isn't just like buying a bottle of Coke in the shop. You really need to be patient, because this is probably one of the biggest decisions you'll make in your life. Now the second tip we've learned along the way is location is key. Now that's pretty obvious I guess, but it really only hit home when we actually started looking ourselves. For example, and this is probably across the globe, obviously the further you move out from the city, the bigger the houses get and the cheaper they get as well. But that obviously comes at a cost, which we've certainly learned ourselves when going through this journey. For example, let's say using Cork as an example, if you bought a house in the city here, one that's pretty much falling apart, you could be paying minimum 400,000. Whereas if you move way out into the countryside, you could get a mansion for 250,000. So it kind of just shows the difference here. So in our own personal opinion, we wanted a happy medium in terms of having a house a bit out from the city, mainly because we like the country life as well, but second of all because it is cheaper. And definitely it took a long time to find a house we were happy with. That's kind of best of both worlds as such. That's probably why we waited so long to find a house in the correct location. Now obviously only about 8 months back, there was a house way out in the countryside, probably about 50 minutes from the city, that we really liked. However, the more you thought about it, or the more we thought about it, should I say, the kind of more we realised that it's completely unrealistic, especially when we both work in the city. Commuting 50 minutes each way every day is certainly going to be taxing long term, and inevitably you probably will even pay that money back on car wear and tear, and even petrol or diesel as well. So long term, you'd actually be paying more. as opposed to if you live close to the city, your commute would be a lot less. And even if you wanted to go to the gym as an example, it would take literally the whole morning to get there, do go to the gym and come back as well. And obviously, if you're kind of young as well and want to kind of settle down and have a family, this would have definitely been unrealistic as the local amenities were very poor. There wasn't even schools or even a local shop in that area. Hence why eventually we decided not to go there. Although the house was very big and the price was very cheap, obviously there was a reason for that. So that's one of the main things here. And again, it's probably one of the main pieces of advice any auctioneer or anyone that found a house will give you is that location is key. Now, probably one of the most important points is got to do with budgeting and being realistic. Now, obviously, especially when you're younger, you'd expect everyone can afford, let's say, 2 or 3 million euro houses, but that is definitely not the case. Now, as an example on screen here, let's say person 1 and 2 here earn 50 and 30,000 each respectively. Again, just going off probably the average salary in Ireland is about probably 40,000. It could even be less than that, maybe 35. But for this purpose, let's just say it's about 40,000. Now, in Ireland, again, you need 10% for your first time house in terms of savings. So obviously if the house is 500,000, you need 50,000 at a minimum saved here. Now, again, you get up to, and this is a max of 3.5 times your combined, let's say, wages a year. So for the purpose here, let's say person A is on 50,000 and person B is on 30. That's about 280,000 mortgage here. Now, again, most people mightn't even be on this amount. They could be on more, but on average, probably you could even be a lot less than 50,000 a year. Some people might even be on 20 odd thousand. So again, this figure could be a lot less. And let's say your savings as well of 50,000, that will give you a combined overall purchase price value of 330,000. Now you then need to factor in the likes of valuations, solicitor or lawyer fees as well, which is probably another 5 to 8,000 depending on the cost of the house, especially with stamp duty at play here as well. So again, just because you can get 330 doesn't mean that's there's still more additional cost than that as well. And that's even if you have 50,000 euros saved. For example, below here, if these person A and person B saved a combined 1,500 a month, which might even be too much for a lot of couples, but let's just say for the purpose of this example, to keep it clean, each person saves about 750 a month, which would be 1,500. That equates to about 33 or 34 months, or just under 3 years, even just to get 50,000. So again, it just shows how long this process actually is, and that it actually takes a long time, and these figures could even be a lot less depending on the people at play here. So again, you need to be realistic in terms of the overall value you can expect to pay for a house. And just one final point to note on this as well. Again, I know these are fictional figures, but even if this house, let's say, is a brand new house as well that this person A and B are buying, you obviously need to factor in another minimum 20 to 50,000 to actually kit out the house. And even if it's a second-hand house, more than likely it will need some form of restoration or repairs. Again, so that's probably adding on another 40 or 50,000 euro here from the purchase price. And when you actually equate in the stamp duty and solicitor, etc. fees and house insurance, etc., this 330,000 could well and truly be up to the 400,000 mark. So if anything here, even if you get 330,000 overall purchase price, you need to cut this fairly back if you need to equate all of these factors in. So realistically, even if you have 330,000 to play here, you could probably only afford a house for about 270 or 80,000, including all of these additional factors, which would then add up to the 330,000. Now, point 4 is the application process in terms of a mortgage. Now, you can't even apply for the mortgage until you have sufficient amount of savings saved up, and you can show the bank that on a month-to-month basis, you're able to save X amount of money. And obviously, you need to have a job at play here as well. You cannot get a mortgage if you don't have a full-time job, and that nearly goes for the both parties at play here. So again, it's very important that you have clean statements. For example, you shouldn't have any betting accounts as an example here, as this will be a huge red flag on your mortgage approval or mortgage application, because obviously that is completely against the rules here as such. So again, you need to be mindful of what's actually on your statement, because this, even if you have the money saved up and ready to go, this could definitely play a big factor here. Now, in our own personal circumstance here, we found a very useful idea or tool given to us, and that is actually to go through a mortgage broker. Now, they usually charge 1% fees here, but again, you actually don't pay any of this 1%. It goes directly to the bank. So once they get you the best rate, so let's say this couple, or Mr. and Mrs. Murphy, let's say, want to get a mortgage for 500,000, then this mortgage broker will go around all local banks, So in this situation, it would be like so Bank of Ireland, AIB, etc. And it would get you the best rates and best overall value for money. They'll then come back to you with the examples. Again, it's up to you if you go with this or not. But once you actually decide on the broker or the bank, and once the mortgage is overall and complete, they will then be charged 1% and it won't come out of your pocket, which is the main thing here. So certainly, even just like car insurance, it's a win-win situation to get people knowing what they're doing and going around getting you the best rate. So we found this very helpful, and it definitely cuts out a lot of the stress and hassle because they do most of the work for you and you don't need to pay anything out of your own pocket. Now, just one other tiny tip here as well on this point is organization is very important here, because you need a lot of documentation updated regularly. So to have a kind of broker or to kind of have a folder as such away from everything else to kind of keep this as clean as possible, because you'll always need updated salary certs, mortgage approval certification, also salaries, etc., monthly or weekly salaries depending on when you get paid, and all other kind of proofs of employment and savings. So again, this is probably the biggest headache of all when applying for a mortgage, is to get all the correct documentation ready to go for the mortgage approval. Now, the fifth point here will vary country to country, but in Ireland, as an example, as that's the only one where I have some knowledge of at the moment in terms of property, is to always go for government initiatives. Now, government initiatives could range from a lot of different things, and we weren't and be known to this at the time, is that you can actually apply for help to buy scheme. Now, this is up to €30,000 off the purchase price of a house. Now, kind of a caveat here is that it has to be a brand new house. So we are going to be able to take advantage here, and this will apply to no matter how much you actually get paid or how much your salary is. For example, you could even be on 2 million a year and you'll still be able to take advantage of this help to buy if it's a brand new house. Now, this is up to 30,000 combined between two individuals here at play buying a house. Now, it depends how much tax you paid back over the last few years. So if you're only kind of new to work or new to kind of the whole employment thing, you won't be getting 15,000 per person here. But again, the longer you work and the more tax credits, etc., built up, the higher this amount will be, up €30,000 max. But again, this is very useful. Now, obviously, I can't disclose how much we got from this 30,000, but definitely, if you are looking to buy a brand new house, you should definitely look into this, because every little helps in terms of accumulating as much capital as possible. So in the end of the day here, you have to pay back less on your mortgage over the next 35 years. Now, obviously as well, we sold our €13,000 portfolio only a few weeks back, mainly due to have as much capital at play here to have towards the house, which in turn will give us less to pay back over the long term in that 35-year mortgage, which was certainly a good idea at the time. So I'm very happy with that. And I did mention at the time as well that once the house was officially sorted, which it is nearly down completely sorted at this stage, and I will, obviously we have the wedding coming up as well and a second car to buy also. So as you can imagine, there's a lot to be paying for over the next 12 to 18 months. So once that's all sorted as well, now again, the wedding and car are pretty much already sorted, but again, in terms of investing down the line, I will be starting to kick this off probably in a few weeks again in the stocks, crypto, ETFs, and also another few online businesses that we discussed in prior videos as well. So I'm really looking forward to kind of getting back into the swing of things now that I'll have more time to make videos and obviously more capital free to play around with here as well in terms of investing. So obviously the frequency of videos will start to become a lot more again, thankfully. So I'm really looking forward to that as well. So that's pretty much the end of today's video. I just wanted to give you that exciting news of purchasing our first family home together. So I'm really looking forward to that, and I kind of give 5 tips that we've learned along the way over the last 3.5 years for saving, mortgage approval, and actually finding a house. So hopefully those 5 tips will help you somewhat, shape or form. And finally, I just want to give a very brief update on where we are at this time in terms of investing. So thanks very much if you made it this far in the video. I hope you enjoyed it, and I will see you all in the next video.